Hello everyone and welcome back. Today / towards the end of yesterday, the crypto markets began to pick back up. HEDERA has gone on a bit of a price accumulation. We're up sort of 7.5% over the last 24-hour period, and things are starting to look a little bit more rosy. This video I wanted to cover staking, which as I mentioned previously is in the roadmap to be released in Q2 of this year, and more specifically I wanted to look at some estimations for the staking rewards if you were staking as a node. Now we can actually work this out because there is a generalized formula. I've repurposed a document from someone called HashChad over on YouTube. I'll leave a link in the description to check out some more of his work. I've kind of modified this a little bit, and obviously there's some assumptions being made, but I'll start walking this through and then we'll get some sort of APY and APR estimations for staking over the course of a year or 365 days. So one of the first things to take into account is that there's conflicting reports in the roadmap for HEDERA as well as some of the documents about 𝗟𝗜𝗡𝗙𝗥𝗥𝗥 taking a 10% cut of all staking revenue. This has not been factored in to these, but we basically could turn around and say, okay, everything we've got here, expect 10% less effectively. So we'll sort of begin walking through this. Now the general formula for return within the crypto space for staking is this: N times T times V all over the circulating supply times by the price divided by 100. So what's N? N is effectively the number, so the number of HBAR in your stack or in your wallet. So for simple numbers here, I've popped in 20,000, so you've got 20,000 HBAR you hold. T is the transactions per second of the entire network. I've gone over to Dragonglass and just kind of looked at the sort of average transactions per second that we've seen on the mainnet. Naturally, HEDERA is effectively infinitely scalable, so the transactions per second, especially when sharding gets released, will just continue to increase. So this number could be wildly out, and I've done a bit of a speculation here. Actually, if we look at obviously HEDERA, they kind of tout themselves anyway as being at 10,000 transactions per second plus. So we'll use that as a general flag point here. Percentage of HBARs proxy staked. Again, there's no way for us to really know kind of what percentage is going to be proxy staked. I've just assumed 50% here. Naturally, as time goes on, we'll probably see a larger percentage of them being proxy staked. One thing to look at if we want to do this properly is the percentage of HBAR that's sitting on exchanges versus in wallets. It will tend to be that anything that's sat on an exchange won't be able to be proxy staked, or especially not for the desired APR or APY. Average value of each transaction. This we can actually calculate, and this comes from HEDERA's weighted percentage costs. If we actually head over to docs.hedera.com, they've got their fee structure. So we're basically just taking an average of all the operations here. So for example, creation, updation, transferring, etc., the consensus service, token service, yada yada. We can take an average, and then this is effectively the average value of each transaction in cents. So 0.0027 cents per transaction. Okay, cool. So if we just start running through the formula then, which we've got over here, we can see that staking a single HBAR in this sort of theory section of numbers, effectively, this is how much HBAR you generate per second. The full stack, so the number you entered up here in N, this is how much HBAR you'd be generating per second in here. So if I sort of up this to 100,000, this is kind of what it looks like, 1 million, etc. So I'll go back to 20,000. So your stack as a staked node, this generates this much dollar per day. So effectively this number per second times by 60 for minutes times by 24. So roughly, we'll round up 2 HBAR per day. And then over 365 days, you'd be seeing $685 per day. Okay, cool. So let's try and work this out in terms of an APR and APY. We're going to assume the price of HBAR up until Q2 2022 remains at, say, 20 cents a HBAR. I don't see this happening. We're probably going to see price accumulation over that period, but for argument's sake, we'll use this to keep the numbers sort of nice. So we'll look at how much HBAR we'll be generating per second, again per day, and then per year. So we're seeing here that we'll be generating off 20,000 staked, 3,427 HBAR would be generated over the course of 365 days. So our year-end balance is 23427. Now, if you work this out as a formula, the APR to begin with is roughly 17.13%. And if we calculate into an APY with a compounding period of daily, it's roughly 18.68%. Starting balance 20,000, 23,427. So that's actually quite a decent staking yield, actually 20% or something large. This isn't a meme coin where you're sort of staking to try and receive 100% APY, which is an inflationary coin, for example. Yes, technically HBAR is inflationary. They've got 2/3 effectively the HBAR is locked up with the founding teams, which will be released, but there is a fixed supply of 50 billion at the end of the day. There is an actual cap. In the short term, inflationary. In the long term, it's not. So for example, if we up this to 100,000 HBARs, you've got the network grows and we're processing 100,000 transactions per second, and we say 90% of the HBARs get staked. We'll say the value of each transaction stays stationary and the price of a HBAR goes up to 50 cents. We're looking at an APR of nearly 40% or 45% APY when it's daily compounded. So hopefully this guys gives you a bit of insight into how amazing this is going to be for everyone that's been accumulating during this sort of price depreciation phase. But there is definitely massive potential here to generate a decent yield of a project which has a bright future. Anyway, guys, cheers for watching. I hope you enjoyed this one. Leave a like and a comment if you did. See ya.